Well, good afternoon, everyone. It's 10 past 12 here on Friday, the 23rd of June. I'm looking at the gold market and I've had this view for the last couple of weeks now that the gold market needs to sell off. I think that we've had a nice impulsive Elliott wave structure up, and we're now in the throes of a corrective move down, which has got a little bit to go. My best calculations on the time that it'll take, I think it'll take into the second or third week of July to finish this C wave down. So this is A, there's a little B, and there's a C. And at the moment, I'm on the third trade within that prognosis. We have a look at the early chart. Took me a while to get the scaling right, folks. Please excuse me. There we go. I took a trade short here on, I think, Tuesday or Wednesday when I did the last video. I showed that there was a Wyckoff upthrust just there, and I got a bit of that. Worked very nicely indeed. Go away. Then the market went up. I was hoping that it was going to go up and take out that high, and that would give me another fairly agricultural upthrust, but it didn't. So it just fell. And I unfortunately only got short here. Those of you that know my work will know that I really like inside bars, and so I'm short from 1924 with a stop loss above that bar, which was at 1931. I actually put it at 1932. My friend Larry Pesavetas tells me that on an early chart, his best sums show that an $8 stop loss on gold is optimal, although it's a while since Larry and I have had that discussion. So I had a target in the market last night, which it hasn't made, and my target was this, although it's very difficult to do targets from spikes, but my target was in fact in the system at slightly above 1908, but it wasn't far enough above 1908 to get me out. So maybe a bit careless there. I should have maybe made that 1910, and I would have been out already. Nevertheless, the darn thing is rallying, and if I were to take the time, which I'm not going to blow that up on a 15-minute chart, we can see a fairly good example of a rising wedge, which is a bearish pattern in this case. It's rising towards those points, and I'm happy to hold this. My stop loss is at entry at 1924, and my target's still in the system at 1908. Okay, so let's see how that goes. I can't lose any money, and remember, folks, don't focus on being right or being wrong. Just focus on the four realities. That's a big win. And I've had two of those in gold now. Oh, go away. A big win, a little win, lots of those along the way. Small losses, unfortunately, lots of those as well. And the thing that you want to avoid at all costs is a big loss. So we'll see if this breaks down or not. Now, the S&P is starting to look really interesting because that's an early chart of the S&P, and that's that sell-off that we've had over the last couple of days. But are we getting ready for a push up here? Now, if I draw a line in here, we can see that from that level, there's a great deal of support on the chart. So at least twice here, the market's come off that level. We had resistance, support 1, support 2, support 3. Market has gone up and has come down. And for a valid Wyckoff's upthrust, we would need to come down and take out that low and then reverse. So if the market should fall through the level and then make a strong reversal candle with a close above the level, then I would certainly advocate going long this afternoon for a few points. We shall see. I won't do anything until 2:30 at least, but I would expect at the open for the market to move down and take out those stops. So is the downtrend going to be maintained? Well, maybe, of course. It could easily be. But the Wyckoff Spring is not that great in terms in defining market direction. But what it is great at is that it gets you in, as Wyckoff said himself, at the point of maximum pessimism, where the risk is lowest. Tiny, tiny, tiny little stop loss. Now, if this rallies at all, where's it going to rally to? Well, I can tell you. It's going to rally to somewhere between here and here. So if it goes down and crosses that level and then crosses back up again, there's the potential for a run till 4415, or probably more likely, this recording software gets in the way. That's a bad workman blaming his tools, I think. Or to 4, so there's the levels better, 4418 to 4431. And that would be a rally from, again, it's in the blessed way, from about 4350. And that would, in fact, would be, what, an 80-point trade, which would be very, very welcome. So that's how I'm thinking today, folks. Just remember that I tend to be quite contrarian, and this market can keep on falling. But my stomach tells me we want to get a bit of a bounce today. I won't trade my stomach. I shall wait for it to take the level out and then reverse. I hope you found those videos some use. I still think that gold's got a little bit further to fall. I think when it does find a bottom of this wave C, then I think it's going to be probably one of the best buy-ins in gold for quite a long time. Okay, and when that occurs, I shall be advising the VectorVest clients that I think that they should consider being overweight in gold stocks. I'm certainly going to be. Thanks very much. Bye-bye.